As today, as we share our business and financial updates for the quarter and half year ended 30th September 2025. Let me begin with the industry overview. Execution in Q2FY26 was somewhat muted due to extensive monsoon and intense competition. Only 300 kilometers was awarded while 1600 kilometers was under construction. But with robust pipeline and NHAI tightening contractor availabilities, larger players with strong balance sheets are well positioned. Fast-track toll collections, which rose 15% in volume and 23% in value during July-August 2025, further improving the monetization dynamics. From a medium-term industry standpoint, India's infrastructure sector continues to gain momentum, backed by strong policy support and long-term growth visibility. The government has outlined a massive 11 lakh crore investment to expand India's high-speed road network, five-fold by 2033, adding nearly 17,000 kilometers of access control expressways capable of speeds up to 120 kilometers per hour. As of March 2025, the national highway network stood at 1.46 lakh kilometers, which out of which only 4,500 kilometers meet expressway standards, highlighting a significant expansion in the runway. At the same time, the Ministry of Railways is also exploring hybrid annuity model like structure to boost private participation in rail infrastructure, while the Highway Ministry is revisiting its BOT model to make PPPs more viable through enhanced viability gap funding and annuity-based support. The recent rollout of GST 2 is also expected to have a far-reaching positive impact on infrastructure and construction ecosystem. By rationalizing tax rates on key building materials such as cement, bricks, and stones, the government has effectively lowered construction costs by an estimated 3.5 to 4%. This move is expected to make housing and infrastructure projects more attractive and more economic. The National Highway Authority of India has signaled its intent to accelerate awarding in H2. It has identified 124 projects covering 6,396 kilometers with an estimated EPC cost of 2 lakh crore and total capital cost of nearly 3.45 lakh crores. Approximately 72% of these expected under the HAM model, 18% via BOT, and 10% via EPC. Additionally, NHAI has raised its asset monetization target to 40,000 crores in FY26, up from 30,000 crores earlier. Following successful monetization of 28,724 crores in FY25. Sorry for that. Coming to the company update. So excuse me. As highlighted in our previous call, we continue to demonstrate strong execution capabilities and financial discipline across the project portfolio. Continuing our diversification into railway electrification during Q2 FY26. We secured two significant contracts from Northwestern Railway, one from Jaipur Division worth 499.95 crores and another from Ajmer Division from 539.35 crores. Both involve upgrading the electrification traction system to 2 into 25 kVA standard to enable high-speed rail movement up to 160 kilometers per hour. These wins not only enhance our order book visibility in the railway, but also validate the growing trust of public authorities in our technical expertise and execution record. On portfolio management front, we successfully completed the sale of 5 HAM SPVs for an aggregate consideration of 1146 crore to Epic Concessions, 2 Private Limited, Infrastructure E-Trust, EAAA India Alternatives Limited. This transaction reflects our continued focus on unlocking value and strengthens our balance sheet, enabling us to reinvest in new growth opportunities. During the quarter, we also consolidated our presence in toll space through strategic acquisition of our subsidiary Viva Highways Limited, increased its stake by 26% in Jaora-Nayagaon Toll Road Company Limited to 61.167% for a consideration of 166.6 crore, underscoring our confidence in the asset's long-term cash flow potential. Additionally, the company acquired convertible debentures worth 882 crores in Ashoka Buildcon Limited. Coming to the order book status, the company has received 2 new projects orders as discussed above from the following: Northwestern Railway Jaipur project and Northwestern Railway Ajmer project. As on 30th September 2025, our balance sheet order book stands at INR 14,888 crores. This is excluding order received post 30th September 2025 of INR 468 crores and Concall project of INR 279 crores cancelled by MMRDA. The breakup of order will as follows. Roads and railway projects comprise around 9,804 crores, which is 65.8% of the total order book. Among the road project order book, HAM projects are to the tune of 1,834 crores. EPC road projects are worth 6,816 crores. Railway is around 1,154 crores. Power T&D accounts for around 4,623 crores, which is approximately 31% of the total balance order book. The total EPC building segment is at 462 crores, which is 3.1% of the total order book. Our primary focus remains on maintaining a sustainable EPC business in segments of roads, highways, railways, power transmission, and as well as buildings. I would now request Mr. Paresh Mehta, CFO, to present the financial performance. Thank you.
Thank you, sir. Good afternoon, everybody. Starting with the standalone numbers, for Q2 FY26, total income stood at INR 1303 crores as compared to INR 1459 crores in Q2 FY25, a degrowth of 11%. EBITDA for the quarter stood at 160 crores, flat year-on-year, with EBITDA margin of 12.3% and improvement of 130 bips year-on-year. Profit before tax, before exceptional items, stood at INR 57 crores. In Q2 FY26, the company sold its entire stake in one HAM subsidiary and recognized gain on sale of this investment as exceptional item. Overall PAT stood at 139 crores against 36 crores over Q2 FY25, up by 284% year-on-year. Our revenue contribution for each segment for Q2 FY26 is as follows. Road EPC contributed 54.9%, Road HAM contributed 11.8%, Power T&D contributed 15.3%, Railway stood at 6%, and other segments like Building, EPC and others contributed to 12%. For half year FY26, total income for half year stood at INR 2,642 crores as compared to INR 3,360 crores in FY25, a degrowth of 21%. EBITDA for H1 FY26 stood at 311 crores, up 2% year-on-year with EBITDA margin of 11.8% and improvement of around 2.70% year-on-year. Profit before tax, before exceptional items, stood at 101 crores and PAT stood at INR 170 crores as compared to INR 77 crores in H1 FY25, up by 120%. 1% year-on-year. Coming to the consolidated results, total income of Q2 FY26 stood at INR 1,908 crores as compared to INR 2,529 crores in Q2 FY25, with a degrowth of 25%. EBITDA for the quarter stood at 642 crores, down 32% year-on-year, with EBITDA margins of 33.6%. Profit before tax, before exceptional items, stood at INR 284 crores. In Q2 FY26, the company and ACL sold their entire stakes in 5 subsidiaries, and the resulting deficit versus the carrying value was recognized as exceptional loss. PAT stood at 91 crores during Q2 FY26. Total consolidated debt as on 30th September 2025 stood at 4,910 crores. The standalone debt is at INR 1,362 crores, which comprises of 83 crores of equipment finance, 300 crores of NCD, and 978 crores of working capital loan. In Q2 FY26, in our BOT division, the company recorded a gross toll collection of 357 crores as against 316 crores in Q2 FY25, recording a growth of 13% year-on-year. With this, we now open the floor for question and answers. Thank you. Hello. Hello.
Yes, sir. Please go ahead.
Yes, I'm done. So I have opened it for question and answers, so you can participants to line their questions.
Sure. Thank you so much, sir. Ladies and gentlemen, we'll now open for the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our first question comes from the line of Trisha Rati from Enam Securities. Please go ahead.
Hello. Hello. Am I audible?
Yes,
ma'am.
Okay. So I have a couple of questions. So my first question is, what is the latest status on the proposal of the 5 BOT subsidiaries, Maple Infrastructure Trust, and what timeline should we assume for the completion?
So for the 5 BOT projects, we expect to conclude the transition by 30th November.
Okay. My second question is, with the multiple asset transfer completed, how should we think about the long-term portfolio mix? Does the company remain focused on EPC or is there continued interest in HAM and BOT assets selectively?
So EPC continues to be our forte as a business, and we derive EPC from our HAM and BOT projects also. In consequences to the EPC businesses or parallel to the EPC business, as opportunity is available, we will continue to bid for HAM and BOT projects as and when opportunities arise, and continue the development of assets along with major drive on EPC, including other sectors.
Okay. Thank you, sir, and all the best.
Thank you. Our next question comes from the line of Dr. Amit Vora from the Homeopathic Clinic. Please go ahead.
Good afternoon, management. My question is regarding this. There was this article on 29th of October uploaded by the company regarding this SSLD resolution plan approved for 80 crores NCLT approval pending. There was some land acquisition or something. Can you just brief us about that? I have some idea about it, but I wanted to know something in detail.
So, as we have communicated in the past, our subsidiaries, including Viva Highways and other SPVs, hold land out of the surpluses arrived from their BOT projects. So one of the lands was taken up for JDA development with one of the partners through the SSLD company, right? Sri Sainath Land Development Company. This project was taken up along with another partner who was the working partner, which was way back in 2017-18. During the course, the project could not go as envisaged, and it went into NCLT. Post NCLT, in order to salvage the land and to ensure that the land revenues are protected, the company has bid for this project through its subsidiary Ashoka Infraways, and has given an offer to settle the loan for this project from LIC Housing for 81 crores. And in the due course, in the next 3 to 4 years, the company will repay the loan of LIC and complete the project in its optimum timelines.
And what is that project, sir? What would is it a building or what is it?
It's a real estate project. It's a real estate project
project.
Right, sir.
Near Pune, I suppose.
No, this is near Nasik. This is at Nasik.
Acha. And last year we sold a land to Infosys or someone, Microsoft. That was in Pune, around Pune.
Right. That was in Pune. We had a land bank which we sold 16 acres to Microsoft.
Okay. So we still have some land bank in Pune also?
Yeah, we do have land bank in Pune and Nasik in our 3 SPVs, Viva Highways, Ashoka Infraways, and as an opportunity comes, we will keep on monetizing these.
Okay, thank you, sir. If you can just let me know what is the book value of that land bank, either mentioned the books or the current book value is current value of the proper land.
Maybe you can come back separately on this. Okay,
no problem. And sir, there's another question. We have this 1826 crores on consolidated cash. So how did we arrive at this in this quarter? And how are we planning to use it in future? This 1826 crores.
So this 1826 crores is largely cash lying at our various BOT projects and substantial cash lying at Ashoka Buildcon in the event of the monetization of the 5 HAM projects. So out of this, almost 900 crores of cash lying at Ashoka Buildcon's bank balance was utilized for procuring the CCDs of Makuri, which we have said of approximately 882 crores. Which was post 30th September. So largely this money was utilized for buying the CCDs of ACL by Ashoka Buildcon. Okay. When the other 5 BOT projects also culminate, we will buy the balance stake of around 650 crores from Makuri and given 100% exit to Makuri from ACL.
So still another 650 crores is to be paid to Makuri?
Yes.
And we have still 900 crores on the balance sheet, even after this 1800 crores.
But that is largely on BOT projects and HAM projects, which are very project specific. So generally not.
Okay.
Yeah.
It's not free cash to be used.
Yeah. They are generally project based cash.
Okay. Any L1 bids for? Are we at any places in L1 currently?
We have projects. Yeah, please, sir.
We currently know L1 bids.
Yes, sir. I did get that. Sorry, sir.
So we are not L1 in any of the bids. There are certain bids to be opened.
Yeah. Okay. And if I can just ask one more question, if it's possible. Sir, our traffic management system revenues have started?
Not yet.
No, not yet started. These are in survey mode. Survey and finalization of the locations.
Okay. I have some more questions, but I'll join the queue again. Thank you.
Okay.
Thank you. Our next question comes from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah, sir, we have seen a sharp decline in terms of revenue in the first half. So how do you see the growth in the second half and the guidance for the entire year, both for revenue and margins?
So largely the revenue for H1 has seen a decline. Couple of major reasons of quite a long, elongated monsoon for these 6 months, continuing in October also, may have a small impact on Q3 also. And in certain projects, there is some delay in land acquisition for projects largely in Maharashtra area. So looking forward, we believe that based on these constraints as well as new projects being bid out slightly on a slower mode, though we expect in the second half there could be good bidding and receipt of orders. We expect to close this year with the same tenor as last year on the EPC.
But even for that, the required rate in the second half is around 18-19 odd % revenue.
So that will be achieved because generally second half is a high turnover and the projects which have taken off will give a lot of turnover in H2.
Sir, and one of our MSRDC project was cancelled. So is there a risk to other packages as well?
No, so other projects.
I'll take up. So this project particularly underwent a lot of change of scope, which was almost equal to the tune of the project cost, and hence MSRDC has gone into rebidding of this project. So there is no risk for any other project, particularly this project. The DPRs were found they are not as per the site conditions, and hence they have gone for the complete rebid.
So execution other projects have started, or this is yet to
Other
start?
projects almost started. Nalkot is moving very well, and Valmuk has also started. Kochhet and Jaigarh will start now because they have forest clearances and mangrove clearances under process. So by December, the project should start.
And when do we expect to receive the appointed date for the HAM project? The Guskara one?
That we are now recent target is December. But this December also, if they are not able to achieve land acquisition, it may go to March. The land acquisition on that project is only 30%. It has to go to 80% plus.
So you are confident of it going to 80 at least by...
Now there is a very aggressive separate team put on the ground by NHAI for acquisition. So they are very much hopeful they should be able to complete the December end.
Okay. Sir, on the order inflow side, it has been on a softer side for the first half. So how do you see it moving in second half and the guidance for the entire year?
So we still hope we will be able to back 6,000 to 7,000 crore in second half.
Incrementally 6,000 to 7,000 in second half.
Yes, addition to what we have. So this year we had around 3,000 crores plus 6,000 to 7,000 crores is what we are looking at.
Okay. And sir, in the cash flow statement, there is a receivables and advances written off of 7 odd crores and a credit loss of 19.5 crores. So what is this regarding to?
So these are largely regarding to projects which have been foreclosed, so there is some income on that side. And ECL provision made on receivables from our debtors, which were recognized in this year, at this quarter, so they were reversed.
Okay. So any more impairments or losses they expect in the second half?
So ECL is a general feature of the accounting practice. Debtors which are slightly dated like 6 months and above, there is some provisioning done. And whenever the money is received, because these are monies received from either SPVs of ABL or from government, the moment we receive that, these ECL provisions get reversed.
Okay. And sir, lastly, are there any slow-moving projects in the order book?
Pardon?
Any slow-moving projects in the order backlog?
So couple of
I
projects.
explained, Maharashtra, two of the projects are yet suffering from forest and mangrove clearances. So once they get cleared, then they will be fast-moving projects. Till then, we are not able to do any activities on those projects.
So which are those projects? I missed the name.
These are Maharashtra-backed MSRDC projects.
Okay. The Kalyan Murbad one and Kaimur.
Kalyan Murbad is going on well. This is Jaigad and Pulse.
Jaigad, okay. And Kundalika Creek is going on well.
Kundalika is about to start now.
Okay. Thank you, sir. Those are my questions.
Thank you. Our next question comes from the line of Pankaj Agarwal, an individual investor. Please go ahead.
Hi, good afternoon. I would like to know, is this delay in the project execution because of monsoon, etc., is this going to impact our cash flow realization in H2? Will it get shifted? And second thing, there were few projects that were withdrawn in Q2, especially in August. So are the remaining projects for H2 on time, or are there more surprises or premature withdrawal of the projects? Because our reliance mostly lies on remaining projects in hand.
All right. So one project of 278 crores was withdrawn, mutually agreed, because it underwent major change of scope. So other projects are intact, and some of them have already they've started and begun very well, like Bankot and Kalyan Murbad and others. Two projects are stuck up for mangroves and forest clearance, which we are likely to start this quarter end. Maybe December end we will be able to start those projects. So there is no other projects which is going to get cancelled or terminated.
Okay. And how are we placed on the cash realization target for H2 by margin?
It will not largely impact cash flows. The way it is moving now, it will slightly improve by margin, but will move on the same pattern.
Okay. And just to get further clarity, are these projects which are ongoing, which are about to be completed, or are the revenue realization on the basis of completion of the project, or part payment based upon the phased delivery of the project?
These are based on POCM method, percentage of completion way of accounting.
So do we expect 60-70% of the completion even after?
So every project, I didn't follow that. 60-70%
of this project value?
As what?
I mean, cash realization target for saying that suppose even if the project execution delays, suppose we delay our cash realization, so approximately what percentage we are expecting to come by H2, let's say, by market or year end?
Generally, if there is a delay in implementation of the project, the expenditure also is get postponed. So from a recognition purpose, it is based on expenditure incurred, revenue recognized, and largely revenue recognized get converted into cash from client in a span of, let's say, 45 to 90 days time. In the power, it is 90 days. In roads, it is 45 days.
Okay, sure. Thanks for answering.
Thank you, sir. Our next question comes from the line of Raj Mehta from MR Advisors. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible?
Yep.
Yes.
Yeah. So, sir, I had two questions. First is, has the company seen an improvement in tender activity in Q3, especially with the NHAI's planned acceleration of awards towards H2?
See, we have building up around more than 80,000 crores of project lined up now, for which dates have been declared.
Okay.
And there are other projects in the pipeline. So every month they come out with new set of projects. And definitely they are aggressive on bidding as well as awarding in H2.
Okay, got it, got it. And sir, I have one more question. The net debt levels and interest costs have increased in this quarter. Can you please guide me on the key drivers, and do you expect any deleveraging by the end of FY26?
Definitely, there is a substantial deleveraging happening in this H2 after realization of the monetization proceeds of the BOT projects, and interest cost would will be reduced.
Okay, got it, sir. That's all. Thank you so much.
Thank you. Our next question comes from the line of Vasudev from Nuvama Wealth Management Limited. Please go ahead.
Yeah, thank you for the opportunity. So, sir, can you give us what is the bid pipeline across all the segments for second half that we're targeting?
So as I explained, we are targeting around 6,000 to 7,000 crores across these sectors. We are bidding in roads, railways, power, solar projects, buildings. So all across bidding activities in full swing, and we expect to realize that by year end we should add another 6,000 to 7,000 to current order book.
Okay, sure, sir. And what would be our pending equity requirements for the HAM projects, like pending to be infused?
Approximately, so on the equity requirement on the latest project, Bhavichandni, is approximately 225 crores. And on the balance projects which are yet to be closed, that is Tumkur-Shivamogga 4, the Khanapur project, approximately 100 odd crores is to be invested.
Okay, so total 325 crores is pending to be infused. And can you help me with the breakup, like how much are we expecting to infuse in H2 and FY27 and 28?
So in H2 approximately 200 odd crores, and balance in 26, 27, 27, 28.
Okay. And sir, so now that we've monetized these 5 assets, so when do we expect to close the deal for remaining assets?
So we have monetized 5 of the HAM projects out of 11 HAM projects. We expect to monetize 4 of the assets by March end and 2 of the assets by June 26 end.
Okay. In June. And what would be the rough valuations, if you can share that?
Approximately 800 and 300. 800 by March and 300 by June.
Okay. And sir, what is the capex that we've done in the second quarter, and how much are we targeting for the full year?
So approximately we have in H1 we have spent approximately 35 crores, of which 10 crores was in quarter 2, and we expect to spend approximately 100 crores by the year end. Total.
Okay, got it. And so, sir, after these monetizations, once these are completed, so by year end, where do we expect our debt levels to be?
So by the year end, we expect our debt levels to be as good as at zero level, because though there will be certain outstanding instruments which will continue of approximately 425 crores, which will get liquidated in April. But that will be supported by cash balances in the balance sheet of ABL. So we'll have to we probably will see a substantial reduction in the standalone debt of ABL.
Okay. And so this year that we'll be seeing flattish revenue. So next year then can we expect about 10 to 15% growth?
Yeah, that is the target. Of course, this is based on order inflow which will happen in next 6 months.
Okay. And what kind of EBITDA margins then we are looking at for this year and next year?
In the range of 10 to 11%.
10 to 11%. Sure, sir. That's it from my side. Thank you.
Thank you. Our next question comes from the line of Sandeep Dixit from Arjav Partners. Please go ahead.
Thank you. Out of these 1,100 crores of assets, HAM assets sold, so these second quarter numbers are excluding those five assets, including this five?
Sorry, could not hear you. Probably it could be clearer.
Yeah, sure. Yes, the notes to the account say that these five HAM assets were transferred on 29 September. So does the second quarter number include those five assets or exclude the five assets on the P&L?
No. So what happens is in the P&L and the console, in the console level, the revenues up to 29 September, that is almost for full of the quarter, is captured.
Okay.
And as on 30th September, it is reversed to exit the project from the console balance sheet.
Right. So if I understand that correctly, the P&L has those five HAM assets, but the balance sheet does not. Correct?
Right. You're right.
Okay. So one request I've made, unfortunately, investor relations advisor hasn't been able to help, is to get some kind of a pro forma of how Ashoka Buildcon will look after all these assets are hived off. Because, over the next 6 to 12 months, there's going to be a lot of change in the P&L and that. So a large part of that, for example, next quarter, a large part of the drop in revenues can be explained because of these five HAM assets going off the books. So may I request that if you can sort of put in your presentation a pro forma of how P&L and balance sheet will look, excluding these assets which are contracted to be sold.
So we will try to work along with our IR guys to give whatever information is required the way you want to present it from your internal consumption.
Thank you, sir. I would appreciate that. Thank you.
Thank you. Our next question comes from the line of Bhavin Modi from Anand Rathi Wealth Management. Please go ahead.
Hi, sir. Thank you for the opportunity. In the last call, you mentioned that, we will be receiving around 1,800 crores from the BOT and 700 crore will be the contingent consideration. So, sir, is the monetization in the line there are no change in the proceed amount, right?
Yes, approximately around 1,770 odd crores will be probably by 30th of November. And balance around, may not be 700, maybe slightly lesser due to various changes in NHI circular. So it possibly could be around 500 crores, which will come maybe after 1 year or 2 years based on extension of time given by NHI for our toll extension claims with NHI.
And second, with respect to the HAM assets, it was mentioned that 600 crore will be referred by March 26 and 500 crore by June 26. Yeah. So are the timeline and the numbers intact in respect of the HAM?
Yeah, so as I communicated some time back, probably we will have 800 odd crores before March. We may probably sell 4 assets by March and 2 assets by June. So 800 plus 300 is what the number could look like.
Okay. And sir, with respect to the monetization of 5 HAM assets, we received the proceeds of 1146 crore, but there was some contingent consideration which was kept as a holdback. So, what is the amount and have we received that amount?
So that is approximately 96 crores, which will be received over the next 2.5 months for certain compliances which we have to do, so as to be eligible for those amounts.
Okay, sir, got it. Sir, in last two questions with respect to the bookkeeping, sir. So, sir, in the presentation, you have mentioned that the ACL 4 HAM assets, the profit is 435 crore. So, is this profits are in the standalone books of ACL? Can I interpret it that way?
Yeah, you're right.
Yeah. And second, sir, second question is with respect to the taxation, sir, in the console books. So it is showing a negative taxation, sir. So how should I interpret that?
So this is a deferred tax reversal. For this, probably you can come offline also on this, but
Account of carrying value.
so what's happening is when we are accounting at SPV level, there is carrying value difference. Now carrying value, as we have shown in the balance sheet, there is a loss of 210 crores which we are accounting in the console. Based on that, there is a deferred tax asset reversal which is being shown there.
So is it that, sir, we have already, recognized the profit, and now since there's a loss, so, we have already, recognized, with the higher profit, we have already recognized a higher taxation, in the previous years. Now, because of, showing us the loss, we are reversing the taxation. Is that the way to interpret?
Exactly. The provisioning accounting entries are that way.
Okay, got it, sir. Thanks a lot.
Thank you.
Thank you. Our next question comes from the line of Dr. Amit Vora, the Homeopathic Clinic. Please go ahead.
Thank you for giving me the second chance. My question is regarding, there are two questions. First is regarding the future outlook for the industry and our company for next 1 or 2 years. And are we looking out for any high margin areas apart from our existing, like water, irrigation, solar, or any other high margin, or any other areas?
So outlook I've given in my opening call. We have a strong outlook in infrastructure all across National Highway, MRTH, as well as various states are coming up with their programs. It's all for highways, state highways, and also sectors like railways, water, buildings. Everything is showing up good number of opportunities. So infra is next decade or so is going to be really good sector to work in. We are not looking at any new sector other than what we are presently working at.
Okay. And sir, any outlook about Jaora-Nayagaon? When are you planning to monetize on this?
So this already, Paresh, you can update you.
Yeah. So on Jaora-Nayagaon, as we have communicated, we now own economic interest of 100% of the project. We are seeking certain approvals from the authority for this, allowing us to transfer some 26%, which is in process. We believe it will take some time, so maybe 26, 27 is something which we will try to look at for monetizing that asset.
Okay.
Otherwise, the project continues to perform very well with a good revenue.
In terms of what? In terms of, this...
Revenue, toll collection.
Revenue, yeah. Toll collection.
And hardly any debt. There's hardly a debt of around 13 odd crores which will get paid off in this year.
And for the second half, we see margins of around 10 to 11% on the 6 to 7,000 crore extra that we are planning to get in H2.
Yeah, around 10 to 10.5% definitely.
Okay. Thank you so much, sir. Thank you.
Thank you. Our next question comes from the line of Vaibhav Shah from JM Financial. Please go ahead.
So thanks for the follow-up. So just wanted some clarity on the overall gross inflow and net inflow from the monetization. So from the 5 BOT assets, what will be the gross amount that will be received?
Approximately gross amount would be around 2,300 odd crores. And from the
timeline for the same? How much in 26, how much in 27?
Approximately, as I said, 1,750 plus crores by November end. And the balance could probably get in 26, 27 or 27, 28. It will all depend on how NHI gives us the approvals for extension of time for concession period.
So where the balance amount is stuck, the around 550 odd crore?
So these are extension of project period for claims made by the company, the SPVs to NHI, which is as per concession agreement. There are certain interpretation disconnects which is getting sorted out, which is more of an industry subject. So once that is sorted out, these extensions will be granted, and then once that grant letter is there, we can claim our amount from Maple.
But 750 crore cash should come in by November end.
It should be approximately 500 odd crores based on whatever approvals which we believe are going to find. So we expect this amount to be around 500 odd crores, not 700 odd crores.
No, 750 crore should be received by November end, or cash would come in little later date?
No, 1750 will come by November end, cash.
Okay. And for the 5 HAM, what was the gross amount we received?
1150.
1150. And out of that, the entire amount we have received in second quarter, or something is remaining?
So 1050 crores has been received in second quarter. Around 96 crores is outstanding, subject to certain compliances from our side, which will be done in the next couple of months, and by January we should get those money also. The target is that.
Okay. And then for the four HAMs and 2 HAMs, you mentioned 800 and 300 crores. So that is the gross amount. So entire would be received, or there is some holdback in that as well?
So that will be holdbacks are generally for 2 to 3 months. So that is only for certain compliances, audit, certain balance permissions to be done from other agencies, tax clearances and that. I mean, so it's more of a routine compliances which will be got done, and 100% amount will come through.
So 650 crore balance of SJM Macquarie, that should be paid off in November itself.
Yeah, as soon as we get this receipts, within 8 days time, they will be paid off.
Okay. So secondly, we have seen quite some rise in terms of working capital in the second quarter, in the first half. So how do you see it going ahead?
Largely will remain in the same way, except for power, where we expect the working capital, release of working capital from our employers. So by March end, we should see some improvement in the working capital number of days.
Okay. And sir, lastly, on what would be our order backlog for the MCGM sewage treatment plant?
1 second. One second, I'll just come back.
Yeah, sure.
What's wrong?
Management team needs some time.
I'll just come back to you on this.
Okay, sir. Those are my questions. Thank you.
No problem.
Thank you. Our next question comes from the line of Vasudev from Nuvama Wealth Management Limited. Please go ahead.
Just to give close that answer, around 270 crores MCGM. Hello.
So that participant has left the queue.
Okay, no problem. Yeah.
Thank you.
Yeah.
You can continue.
Sir, just an update on the Chennai ORR project. Where are we in terms of monetization for this project?
So we are discussing with a potential investor, and he's in the process of due diligence. We expect to close out as early as possible. By March, we should be able to sign something with them. That's the target. but discussions are on.
Okay. Sure, sir. That's it from my side.
Thank you. That was the last question for today. I now hand the conference over to Ms. Jyoti Gupta. Thank you, and over to you, ma'am. Over to you, Ms. Jyoti Gupta.
Yeah, so from the management side, I would like to thank everyone for being part of this call. We hope we have given whatever possible answers you wanted to understand. If you need any other further information, please feel free to contact Mr. Devendra Dhruv from SGA, our investor relationship advisors, or myself. Thank you.
Thank you so much, sir. On behalf of Nirmal Bang Equities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Okay, thank you. Thank you, everyone.
Thank you.